That sound means we are now live here on our halftime report, Tackle Trading's daily show, where we break down stock markets, talk about financial news, economic news, corporate news, pretty much anything grabbing our attention, analyze it all, help you guys get some insight out there so you can better run your daily routine. Today, Monday morning, 10/12/2020, growth and momentum stocks are up, especially some of the big tech names, the Apple, Amazon, Google, Facebook, and Microsoft crowd. They are running here this morning. We'll take a look at it and kind of break down the news and some of the reasons as to why that might be happening. Across the board, though, we've got earnings preview. We've got sector analysis that we do each and every Monday. There's some chitter chatter on upgrade downgrades here on a Monday morning as Wall Street firms are coming back and getting to work from the weekend. And we've got the regular crew here as always. We got Coach Matt, Coach Mark, and myself here, Coach Tim, to analyze all this information. Matty, how you doing today, sir?
Tim, doing absolutely fantastic. I'm excited to be here with the crew to break down the market activity today. And I'm doing really good, but I'm not doing as good as LeBron James is today. Congratulations to the Lakers for winning their 12th championship, and congratulations to LeBron James for just being overall amazing, just an absolutely amazing basketball player. But I'm doing a little better than your hot take on LeBron, just barely. So I'm in that zone.
Dude,
I'm not doing as good as Bitcoin is today with that breakout of 11,000. Ooh, beautiful.
Beautiful breakout, one we'd been waiting for, anticipating for quite some time. Happened over the last few trading days, obviously.
And while we're getting on with our market analysis, before you start chat on anything else, you might as well answer in chat who's the greatest of all time, LeBron James or Michael Jordan.
Oh, let's just do that.
Something to discuss while we're getting down to our in-depth market analysis.
Nobody asked that question.
Yeah,
when you refer to the chat, when I know you don't check the chat,
we know what he's doing. I said, okay, I'm not biting. Listen, LeBron James is now the greatest basketball player in the history of mankind. And I don't think there's a compelling argument to put Michael in front of him any longer. So yes, Michael's marketing videos he had earlier this year were quite compelling, and they almost got me. But LeBron James is the greatest basketball player in the history of mankind.
Not taking the bait on this one. Celebrate LeBron, wonderful win, no doubt about it. Just an incredible story there, Matt. There's no question. That's his fourth, right?
I'm not answering that question. I'm not answering that question to somebody who puts Michael Jordan.
I already know it's the fourth. But I'm punting on this.
Do you know what team he plays for right now?
He's on the Cavs.
Yeah, he's his old team.
Right,
don't act like you wouldn't have asked me that question.
All right, let's analyze all this. By the way, the S&P breakout last weekend, obviously carrying through here. Now we've got 4 strong green candles in a row. The last time we had the red candle was the Trump tweet. That's all kind of gone by the wayside here in the last week here, guys. We are running. We're up over 1% today. By the way, the NASDAQ also up over 2% or near 2% right now. Matt, how are you analyzing this technical breakout? We're 35.28. We're within 60 points of that 35.87. What's your read here?
Honestly, the financial news media right now is having a fairly difficult time, writing the headlines to justify the price movement in the market. And so basically we're just regurgitating headlines from literally anytime in the last 2 weeks or anytime in the last 6 months. Stimulus, and we'll certainly have a conversation on stimulus, where we're at in those stimulus stocks and the impact on the financial world. But the reality, guys, is this is what occurs when you're patient and you wait for those multiple time frames from a technical perspective to align. And so where a lot of people are a little confused, and I don't mean tackle trading people, I mean people out there in the mainstream media, people out there in the financial media are trying to attach, logic to and rationality to this price movement when it's really not on the backs of anything out there. They just don't understand how these multiple time frame type systems align and how algorithms treat that. Well, when you're looking at this from a daily perspective, and you finally got your confirmation of the breakout last Tuesday and Wednesday when you got back above the 3,400 after that snapback rally, bear rally we had after Trump's Twitter conversation he was having on stimulus last Monday night. But once you did achieve that 3,400 by 3,420 breakout, you really saw these time frames start to align, and higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And so ever since that moment on that breakout and especially the 3,420 breakout, once you saw that, you just saw those time frames just start to align with one another, and it starts creating a momentum environment where, quite frankly, oftentimes easy money is made in those environments. So from a daily chart last week, we certainly had that confirm. And once that daily chart confirmed, that short-term momentum algorithm, type trader just starts to carry that momentum through. But the chart we've been looking at over the last few weeks, and the chart that has really stood out to many people in the marketplace, not just here at Tackle Trading, is that weekly chart where you saw that, 6, 7, 8% retracement coming down into the rising 20. You had that standard slowing momentum candle with the hammer candle with an upward movement in price, and finally confirmation. And for the longest haul, we've said, once that daily chart confirms, you want to be in this market, you need to be in this market, this market wants you to be in there. That daily chart confirms, the weekly chart confirms. Now you're threatening that all-time breakout on the weekly chart, and you've had a wonderful start from the bull side of the equation this week. And so as we now approach those all-time highs in the 35.50 by 35.87 range, obviously we're going to be a little bit overextended. So I think, stop loss management, selling calls against some of those more aggressive positions that have triggered, over the last 2 to 3 days, or even today. We've had a lot of good stocks trigger here today. Take Apple, for example. And, Apple has a lot of news around it, but Apple had a great trigger here today. Price target has to be in the 129, 130 range. So, it's like Tim asked me today, he's like, I missed the trigger on it. I'm looking at it 123. And Tim, what did I say? Literally, first thing I said to you.
Well, you can buy it at 123 or you can pay 130. So it's your choice.
So it's your choice.
Yeah.
Right, it's your choice. And that's what I see Apple starting to do. And so I do think we're gonna have a quick price movement here where we see Apple in that higher 120s, and instead of maybe locking in profit, maybe you write a call option against it. So I do think in some of those option trades, and the option report had a great start to the week. I mean, just the option report, Apple, Baba, Adobe, DH Horton threatening that breakout, Walmart confirming, Zoom threatening that $500 breakout. And Zoom certainly could be one of those trades of the week. We'll break it down later in the halftime report. But I think you're going to see some quick price appreciation earlier in the week, especially as you start to see Amazon day or Prime Day, Apple Day. Every day is somebody's day type philosophy this week. You might see some momentum with some quick adjustments coming into midweek, but you got to like what you're seeing here from a bull standpoint.
Yeah, and it's really impressive to see the big names like Apple, Amazon, and in anticipation of some of the news they have coming out here, Matt. And it makes you think of the tech sector as well as the NASDAQ right off the bat as well. The S&P is pushing higher, but man, that NASDAQ looks just as good, and if not better in the short term. What are you seeing between the two different indexes?
Well, I'm seeing momentum take hold here, Tim. And so this is not, what you're seeing in the S&P 500 up, a point and a half here today. What you're seeing in the NASDAQ, and let's pull up that NASDAQ chart. NASDAQ up 3.3% today. What you're seeing the Dow Jones up about 1% today, and what you're seeing in the Russell 2000 up about 0.5% today. What you're seeing here is momentum at the very top of the market carry the entire market up. This is not a broad-based rally, and that is a little concerning. That is a little concerning. And when you do not have broad-based rallies, you can throw a wrench in that really quick to stop that. And so this is not a broad-based rally where you're seeing a lot of support, driven from the bottom of the market. You're not seeing the Russell 2000 trigger. The Russell 2000, though, is overextended in the short term. And so I wasn't really expecting, even with the rally in the S&P, I wasn't really expecting the Russell 2000 to lead here, given the fact that you have already driven upwards in price tremendously over the last 2 weeks. The Russell's overextended, seeing the NASDAQ lead, seeing the S&P lead here. That's not to be, it's not to be misconstrued with the analysis, given the fact that you are not seeing a broad-based here. I expect the Russell to fade a little bit. I expect the Dow to fade a little bit. Seeing the leadership out of the NASDAQ and the S&P 500 earlier this week. Once again, what it represents is momentum. That's what it represents. It's that momentum trade, that big dog, the big stock, the momentum stock, the brand name stock. Those stocks right now are leading today. It's not a broad-based rally. We're looking at a stock pickers week this week. And as a stock guy, and I love the stock report this week, I love the options report this week. We'll definitely talk about those today. But for me, the leaderships in the S&P and the NASDAQ right now.
And I do want to get a thorough read on all the sectors here in just a minute. One of the reasons why we are up here today, Mark, is conversation around potential stimulus. I know there's been some back and forth chatter. There's some optimism. There's some commentary that I took a little bit.
Could we go back to the
Let's
daily
wait.
chart on the S&P before
Sure.
we get into the stimulus talk?
Yep.
All right. So as the resident Eeyore of tackle trading, and we go back to a little bit longer time frame. The only thing that concerns me right now, because algos are obviously in control. I added Delta last week. Matt's technical read on this market has been outstanding over the last 2.5 weeks. The last 2 times we had these huge blow-off run-ups in a week period. We had one at the start of June. We had one in August where, and look at that one in August. We have this slow, steady, nice climb day after day. It's really steady for weeks. And then we have this blow off, get extended off. We had the same thing happen in late May where just this really get overextended. And then we had snapback sell-offs after that. Does that pattern of this, whenever we've gotten overextended in the short term, going back clear to May, does that cause you any concern at all?
On the daily chart?
Yeah.
It caused me a little bit of concern, Mark. The same can be said, maybe not the exact same on the S&P that we talked about on the Russell being overextended, but you're approaching some fairly significant psychological and technical resistance zones as you approach that all-time high. And we've done this, guys. Anybody that's been around the market for 6-7 years now, really since 2013. We've done this song and dance in the all-time highs many times, guys. I mean, the 2013 market, the 2014 market, the 2017 market, parts of the 2019 market. I mean, again, if you've been around the market since 2013, we've played the song and dance, game at those all-time highs, and then the breakout to all-time highs. I remember 2013, like we had like 55 different all-time highs in that year, and almost every single one of those, Mark, were led with a little bit of consolidation as it came into that resistance zone, and then it felt like it was like a high base breakout type scenario. And so I do expect the market to slow down as we're approaching those resistance zones between, and I'm just going to give you the zone right now. We don't exactly know where that zone's going to play out. But as of right now, I'm going to give that somewhere in that 25.50 ballpark, 35.50 ballpark by the all-time high at 35.87. And the reason I can't give a specific number to it is we didn't really have a lot of data in that all-time high. Remember, it broke out and then we saw it just come right back down. So there's not a tremendous amount of data in how the market behaves, in that 35.87 zone. So it's just going to be in that zone. But I do expect the market to slow down a little bit as it's approaching that zone, Mark. I certainly expect it for a couple reasons. Number one, it's very positive on a Monday when you're waking up and you're a bull in the market. Obviously, the breakout 3,400 last week, I hope everybody's a bull in the market right now. But when you're a bull in the market, it's certainly positive to wake up and see, okay, the NASDAQ's up 2.5% at the open. The S&P's up 1% at the open. The futures market is bought up the entire Sunday price action. Everything's positive. Everything's triggering. Everything's good. And then you're like, okay, everything's going to be fantastic. But then we're looking right down the barrel at that all-time high as the market is getting a little bit overextended. So that's why I said that this week could see some quick price appreciation to start the week and then kind of fade throughout the rest of the week, just given the fact that you are starting the week off really strong, but you're approaching that ultimate resistance zone, which is going to stop some of these momentum trades. There's no doubt about that. Algorithms, they love buying when the time frames get aligned, but where do they typically start selling? At previous known levels of resistance. And we are going to approach one of those very important numbers, 35.87 in the market, most likely this week. And so I do think you should be quick to adjust stop losses in this environment, lock in profit, adjust some of those more aggressive option trades. So if you're looking at, for example, Tim, if Tim was buying a call option on Apple today and it gets into the 227 to 30 ballpark, write a call option against it, bring some cash flow in against that. Let's see how the market behaves as it's approaching those breakouts before we just, completely open up those risk graphs. So, with the breakout of 3,400, you should have opened up your risk graph. There's no doubt about that. Time frames are aligned, get aggressive. This is when you want to really kind of, push those chips to the middle over the last 3 days. But now that you're approaching that breakout, you can't just chase. At some point, you got to be looking at that 35.87 and say, okay, we have some degree of limited upside potential here. Now, a breakout of 35.87, yeah, we open up the risk graphs again. But as we approach that 35.87 level, you got to close down those risk graphs a little bit, offset some of the risk, maybe lock in some profit, aggressively trail up some stop losses, lock in the profit where you got it, and then you live to fight another day if the market ever stops out, if the market continues the momentum. So what? You adjusted the stop losses, you kept a bullish risk graph.
No, I mean, the only thing that concerns me at all, and this exuberance can last for days, right?
It can last for weeks.
So your advice on the adjusting stop losses as a measure, selling calls, is really spot on and good. I mean, the only thing that worries me is whenever the market has gotten too exuberant in a short period of time. I mean, remember back in May when Boeing was going to 220 and it's like, oh, Boeing's going to be back at 400, or gold and silver, right? When you did not have a healthy blow off. So whenever you've had these over exuberant time periods, whether it's been a broad market in individual stock, gold, silver, you have seen a quick snapback, retracement into a level to see the market get the footing. I mean, I loved the trend in July, right? Slow and steady, slow and steady, slow and steady. I mean, it's a healthy trend. I mean, Matt, you said several times on gold when gold was blowing off the top there for that week. It's like, this isn't healthy. I mean, I remember you saying that a half a dozen times. This isn't healthy, and so I worry that, and once again, I mean, we could be at 3,800 on the S&P, right, in 2 weeks, because you don't know when this craziness ends.
And you never want to be the dude that predicts when it's going to end before you see it on a chart, right? Yeah. You got to let your eyes do the talking here. But as somebody who does appreciate causality, and you and I both do, if you remember back to the Boeing example back in May, what was the rationality behind Boeing and the airlines and the cruise lines and all those others? Oh my goodness, the virus is, slowing down a little bit. We're going to open up the economy. Everybody's going to get back up and running. And the whole time, Mark, I never once believed in that, because I was like, no, the virus is going to do the talking here. The virus, and if you guys remember, about a month later, I was just, had my little moment where I was like, wear a damn mask, guys, because that's going to help the economy more than absolutely anything else in this environment. And so I never really bought into the causation of the economy was reopening up, because I always felt like the virus was going to play a theme. And so that causality, to kind of come back to your question here, that causality back then, I'm not sure you can apply the same type of technical functionality to the market today as we were seeing back in May. Right now, I see this more as the markets are getting aligned. I see this as a little bit of a short-term reversal formation. And even though I do not believe at this point that a stimulus deal will get done between now and the election, I do believe that the market has accepted a certain degree of reality that whether that stimulus bill eventually is 1.5 or 2.5 or 2.2 or 1.8 or 3.2 or any number that's been thrown out there, I believe the market has moved on to the belief that we are going to get a stimulus. Most likely that stimulus is going to be post-election, but it is going to happen. We're so tight up against the election. We're only 22 days away from the election, whereas, that's not a big time frame to actually get a deal done post-election. And so the market's working under that philosophy that a stimulus deal is going to get done. And now they're focusing more on individual price action. They're focusing now on Apple. They're focusing now on Amazon. They're focusing on, the individual headlines this week. I promise you the market's going to be focusing on far more, I don't want to say important, that's not the right word, but far more important in terms of right now, in terms of the market in earnings. You got the banks starting out with earnings this week. All those major banks, JP Morgan, Goldman Sachs, Citibank, Morgan Stanley, your asset management firms like BlackRock is out there reporting earnings this week. You also have, outside of your major banks this week, I believe you also have, other companies like Taiwan Semiconductor, Johnson and
Mhm.
Johnson, United Health, Intuitive Surgical also posting this week. Unlike last week and the week before, you do have a little bit more economic activity this week in the market as well, with the CPI report, the PPI report, you have manufacturing index reports this week. You have consumer confidence and retail sales numbers later on this week on Friday. And also this week, one theme that's going to start to play out, guys, is we traditionally this is where Santa Claus starts coming to town in the stock market, guys. Santa Claus rallies. This is that type of time period in mid-October to mid-December where you start to see those Santa Claus type rallies that have a typical impact on the seasonality of the market as well. And so Santa Claus is not just coming to town this week from a price action perspective. Guys, you're now starting to see Walmart, Best Buy, Amazon, and major big box retailers start to shift their marketing in the COVID season so they don't have this rush in November. Why do you think you're seeing Walmart Day this week, Best Buy Day this week, Amazon Day this week, and other big box retailers? They're now starting to open up their seasonality from a retail sales perspective a little earlier this year because of the pandemic than they otherwise would, after that, Cyber Monday, Black Friday, and, the holiday sales push there in late November. So it's really kind of an interesting, psychology happening this week, because you have so many different things starting to form. Whereas as the market, we're going to stop talking as much about stimulus, guys, in the market. And I'm not talking just to tackle trade. I'm talking as a market participant, given the fact that there's going to be more not impressive or important, but timely news items this week. Even though stimulus is in the back of our minds collectively, I also think collectively most of the market has shifted that to be in post-election, whereas right now the market is going to work on that as a backdrop. It is a backstop for the market. Stimulus post-election backstop. You have the Fed backstop in the market as well right now with the Powell put. And so now the market's being focused on, okay, are we going to get guidance coming back, guys? That's an open question, right? Only 69 out of the 500 companies in the S&P 500 had actual earnings guidance last quarter. Are we going to start to see that come back in the market? Only a quarter of the companies in the marketplace right now have EPS guidance for 2020 or 2021. Are we going to see that coming back in the market? The banks, we know the banks had put a large sum of money as backstops for them in case people start getting foreclosed on and bank defaults and so forth. How are we going to see that? Is there trading revenue going to offset some of the things the other banks are doing in a loss in their loan operations and so on and so forth? So I think these mini storylines collectively are going to start mattering a little bit more to the market, and especially with the backstop of the market belief now being we're going to get stimulus at some point. I think that's a bullish indicator for the market as a whole.
Mm-hmm. Well, and Mark, let's pin down that stimulus conversation for a second. Matt, I love some of the data on the earnings season. I don't think we're going to see strong guidance for 2021 or 2020.
You don't need to see strong guidance. What you need to see is not horrible guidance.
Yeah.
And so even if you start to see just inklings of guidance coming back, that's going to be seen as a positive. And I will just let's start this off by saying it, and because it's going to be said a million times in the next 3.5-4 weeks, guys. We're going to see earnings beats this quarter. You are absolutely. You're going to see earnings beats. I would put that number in the 70% EPS beat and probably 50 to 53% in revenue beats. And so you're going to see beats this quarter, no doubt about that. The beats are going to be on depressed earnings. Just get it out of the way. We're going to make fun of it. Everybody's going to make fun of it. These companies are going to beat terrible expectations, and yet the market's going to appreciate it because it wasn't as bad as last.
I mean, that's why it's great being a bull, right? Is because reality, you don't have to have reality. I mean,
bears have all the data, bulls have all the philosophy.
Yeah, no, that is what I mean. The low expectation earnings beat is one of the
Matt, state that again, please.
Because I thought that have the data, the bulls have the philosophy.
That's right. Mark, you can cite all the data in the world. Bulls have a philosophy behind how the markets move. I agree with that at 100%. And there's an anticipation around earnings, Mark, that they're going to come out and beat these depressed expectations. Anyway, go ahead,
No,
Matt.
Yeah.
no, and even if you have earnings minus 21% year over year, the overriding theme is, hey, in 2020 something, things are going to be better and we're going to get back to 2019 levels. That's not going to happen this quarter. Everybody knows that. But if we're showing just that little, I mean, it's this BS theme. Hey, and it's one of the reasons I love being a bull is because you get these BS themes of, hey, it's now 2029 and we're finally back to 2006.
But hold on one second. Do you buy into the idea, Mark, the 21% year over year estimation on September 1st, that same estimate was 22.5% down. So it's improving. And on July 1st, it was 25% down.
Yeah. And here we are at all-time highs and
Right.
paying higher prices than ever, you know? So, I mean, but once again, I mean, forget reality. Being a bull, you have to suspend reality.
That argument can be made for the last 3 years, though, about earnings growth. And how many times have we made fun of it, right? We've been expecting earnings growth literally for 36 consecutive quarters. We haven't got it. Well, let's just make it 37 then. You know, so the market adopts these philosophical viewpoints and then it just becomes gospel to it to a certain extent. And to me, the simple reality, guys, is one of the reasons why Mr. Market gets away with going up and up in the face of negative data, in the face of earnings growth that is not sufficient, in the face of, you know, we're talking, you know, S&P all-time highs, and economically you can't say we're even remotely similar to where we were, you know, 6 months ago, 8 months ago, 10 months ago, but yet we're still talking about the market being at all-time highs. Is because Mr. Market is not an educated investor, ladies and gentlemen. Mr. Market buys into whatever anybody says out there for the most part. And so you can get away with no growth in 18, no growth in 19, no growth in 20, and you can get away with, oh, we're going to get growth in 2021 or 2022. And if we're not going to do that, we're going to get it in 2023, because you have entire generations now in the market, guys, that are not exactly financially educated as investors. And they jump on the bandwagon, they jump on the momentum, and the momentum carries until it doesn't, and then they get rocked. And you know, it's kind of it goes back to Alan Greenspan and what he said in 1997, 1998. The market can stay irrational longer than you can stay solvent. The market can stay irrationally bullish for a tremendously long time, guys.
Yeah.
I just would like to have the bulls calm down a little bit. Like,
bulls aren't going to calm down.
Then it gets in an overextended snapback scenario.
But Mark, the only reason you want the bulls to calm down is because you hate breakouts. So why don't you just adopt breakouts?
Well, no, I've added a lot of bullish delta the last few days, and you know, I just want a slow, sustained trend.
I know it's so funny watching the value investor being like, "Slow down, market. Slow down, market. Let me catch up, market."
Because those snapbacks, like they do, I mean, and they also like they really confuse. Like when gold had its snapback, when the market had a snapback at the start of September, I mean, they can like cause whipsaw in traders. It's just,
oh yeah,
slow, steady.
Slow, steady.
But the market's going to do what the market's going to do, right?
That's right. That's right. And right now it is running here. And by the way, adding bullish delta, as we were reading the technicals last week, Matt, you were talking about the breakout and all that kind of stuff. I think if by Monday morning here, Mark, this is the first time you're considering going bullish, you probably missed the signals over the last few days.
How did I turn into the biggest bull out of all of us?
Well, because the charts are the charts and you're trusting what you see. So it is, I mean, it's a good lesson, actually. I think the chart is just developing in that way, Matt. I understand, Marky. I do. That's where I think stock picking comes down, sector picking comes down. It's not like everything's running today, right? So I guarantee there's somebody out there, you can go find something that's not popped yet, and you can still find the momentum trades if that's what you're into as well.
You know, we were talking about that with Apple in the scatter report meeting, and we were talking about a little bit of concern that Apple had not broken out with the market. It was underperforming the market. And I forget who said the statement, but they said, yeah, but if Apple breaks out, don't you want to be a part of it because it's going to catch up to the market real fast? Again, I don't remember who said that, but whoever said that, obviously Apple's running. I don't think you can stop trading breakouts just because we're overtly concerned about the market, because we're always concerned about the market anytime the market breaks out. When was the last time somebody was not concerned about a market breaking out of an all-time high and having to pay a higher price than the dude before him?
It's not an easy thing to do.
No,
But
and if you are going to trade Apple, man, I mean, your window for getting in at a reasonable trade is really limited. It's probably today, because in
Well,
these environments, what you usually have is you have this gap up the next day and run, and it can create a sloppy chart to the upside really quick, really quick.
Apple, and I agree with that. In the short term, it's like I told Tim, like, yeah, you might be concerned at 123, and it certainly could snap back to 120. There's no doubt about that. But the more likely scenarios, you're just going to have to pay a higher price. And that's what everybody in the market has had to say literally since the cash opened this morning.
mhm.
But there is some very compelling data on Apple after they release a new version of the iPhone for the 6 months performance. Apple does have a very, very significant history of outperforming the S&P 500 post iPhone announcements,
Yeah, you went through some of
especially
those
new
numbers.
iPhones,
You went
especially new iPhones, guys.
Well, and I love the fact that you did measure that, research, Matt, doing 6 months of analysis, because we've got the Christmas rally, we've got the election to kind of get through as well. And by the way, the long-term charts are just as beautiful here on Apple as the short-term charts. So, do you
Well,
have
I
to
mean,
play it today? I'm not
and I
certain.
didn't do the research. I mean, let's give CNBC. I read it on
Oh,
CNBC,
okay.
but after the release, and just for everybody here today, Apple is having their iPhone day tomorrow. Apple is widely expected to announce the iPhone 12. They're calling it high speed. We're anticipating that to be 5G. So everybody in the market expects this for Apple's first go around at 5G, even though 5G is going to take a good year to get efficient out there, guys. But this major announcement of 5G has really been not just one of the reasons Apple's moving today, but why Apple has been the juggernaut it has over the course of the last year and few years, was they are seen as one of those leaders in 5G. And so, Apple is having their iPhone event tomorrow. They're releasing 4 different phones. They have a redesign for the first time since the iPhone 6. And that was in 2014. Now, guys, the data that I read on CNBC today, after the iPhone 6 was announced, and that was the latest edition, the 6 months later than that, guys, the S&P was up 25%, Apple was up 29%. After the iPhone 7 was launched 2 years later, the Apple was up 29%, the market was up 20%. A year later, with the iPhone 8, the market went up 0, Apple went up 12%. 2 years later, with the new iPhone 11, Apple went up 33%, the market went up 34%. And then last year, Apple went up 64% with the SE2, market went up 41% relative. So when you're looking at the performance of Apple on new phones being released, not the refurbished old phones, so not like the 6S or the XS or whatnot. When they announced like a refurbished phone, like you had the iPhone 6, then you had the iPhone 6S, right, where they say what's new about the iPhone and then literally nothing's new, but you got to get the new iPhone. In those two environments, Apple did go down 8% and 19% respectively. Market went down 11 and 15% in those same timeframes. So it's not like Apple does something completely different than the market, but Apple does have some compelling data in the 6 months following an iPhone release. So my point is this: if you miss the breakout today, yeah, and you're not willing to take on the risk of 123 down to underneath the breakout channel, you might miss out on this one trade. But if the Apple data does repeat itself, you're going to have a few more trades in front of you in the next few months.
Mm-hmm. Yeah. Yeah, I agree with that. And as a trend develops, Matt, that's always something to remember. You don't have to let FOMO just drive every one of your decisions, but I still think you can map out a trade here today. That's not what I'm saying. But there always is another opportunity. Let it consolidate, let it run, let it come back. If this is going to be a developing trend, then you've got interest over time. No question about it.
Well, you gotta like it on the daily. It is confirming, very similar to the market a few days ago. When you're looking at this on a weekly chart, you got to have that confirming on the weekly chart as well. So your time frames are aligning in Apple, and I think for everybody out there in tackle land, we all understand that this is election season. We all understand that anything can happen in this season, and you want to be conservative as you're trading. You don't want to go push all the chips to the middle. You want to keep position sizes tight. You want to be structured in your trading your trading routine. But like I've said for the last 3 weeks, you see an opportunity, you got to take the opportunity.
Yeah. I do want to get you guys' thoughts on stimulus. I know we've been hitting a lot of the data and the details there, Matt, but I just want to, pose a very simple question to both of you. Do you think the market is now pricing in the fact that we're just not going to have it in the short term, don't care about that in the short term, and that it's just going to be a post-election situation here? Because
See,
I saw a lot of chatter back and forth.
this is the whole pricing in thing. The market was pricing in we were going to get stimulus. The market was pricing we weren't going to get stimulus. Now the market's pricing we're going to get stimulus at some point in the future, but not here today. No, I think the market is working under the belief that it's just going to get stimulus.
Mm-hmm.
How many times have I said in the last 3 weeks, guys? You don't even have to have stimulus. You just got to talk about it.
Mm-hmm. Well, and those headlines have been driving markets. Mark, what's your read on stimulus? A little bit back and forth. You had some commentary out of Pelosi over the weekend, but the president and the White House been saying we're willing to go up in numbers. Mark, what's your read on the whole thing?
My only worry was if early in this week, one of the sides said we're done, right? And I think that's a very low probability.
Well, Mark,
But as long as they keep chattering, that's all the algos care about is those headlines. That's all they care about. And so as long as they keep chattering for the next week.
We saw that last week, though. We saw the ultimate wild card get played out last week on stimulus when Trump came out on his Twitter account and said, I have, ended negotiations and told the Republican leadership to focus on the Supreme Court hearing. And yet, 3 hours later, Trump was talking about stimulus?
No, but we saw the effects on the price action when that occurred. I guess is my main point.
But all it did was stop people out that bought the breakout of 3,400.
But immediately those headlines, Trump did a 360 3 hours later, and those headlines continues.
Okay, so let me paint you a picture then.
Mm-hmm.
Trump comes out and says, I'm done talking stimulus. I'm done until after the election.
Yeah, you a week later, this close, and that's what I talked about last night in the weekend prep, that pretty soon you're going to have a new theme. Earnings is going to take over, and pretty soon you are so close to the election, it's not going to have the effect on the psyche, especially if that's like, let's say Pelosi came out, because Trump's not going to do it again. Senate Republicans don't even want to talk about it. When they're asked directly, McConnell gives an answer. But let's say Pelosi comes out. She's going to come out with a corresponding statement that says, as soon as the election is over, we're going to take care of this. So the market might stop its euphoric run, right? But you're probably not going to have a sell-off. And that
I don't know. I don't know if I can answer that question any longer to a level where I would actually have confidence in the answer. I'm not sure the market would sell even if Pelosi and Trump came out and said we're done with negotiations. I think the market has went to the belief that this is going to be a post-election discussion.
Well, I think every rational participant in the market has. But those headlines, those headlines are going to be replaced this week, starting tomorrow, right, with earnings. And so it's very like Mohammed El-Iran, who is the smartest guy I know. And he is the biggest bear I know too. He thinks this is all a fantasy, ridiculous, stupid thing. But he's like, listen, the market, and he came out in the last 24 hours and he said, listen, the market, and he was talking about the narratives. And I thought it was so spot on. He's like, this market in the short term is going to keep going up no matter almost anything that happens. As the powers that be need to goal seek whatever narrative is needed to explain $90 trillion in central bank liquidity. And today the narrative is fresh optimism on stimulus, but that's going to transfer into improving corporate earnings here in a few days. So, here is a bear, right? Here is a person that says this is a fantasy land, this is a bubble, this ends badly one day. But he says in the short term, that narrative is going to change this week from stimulus to improving corporate earnings. And that's going to be the new narrative, that pushes things up.
I get it. The smart people in the room sound the brightest because they have the data to support their arguments. And I'll be the first to admit that fundamentally, nothing makes sense in 2020 from a fundamental perspective. Nothing makes sense. And so, yes, there is a little bit of fairy tale analysis going out there. But I will tell you as well, This market has a very rich history of making those people who sound really smart and have a lot of data behind them, it has a very rich history of making them go bankrupt.
Right.
And
Well,
I'll
even
go-
the smart
I'll-
bears are saying, listen,
Listen.
yeah, it's going up in the short term.
That's fine. But one of the smartest bears of all time, John Maynard Keynes, was decrying the 1920s market. It's an inflated bubble. This is a fairy tale. This is nothing. There's no fundamental belief behind anything. And he bet against the market, and he went bankrupt. He was right. He was right on his data, but he went bankrupt being right on his data because he was wrong on his time frame.
Don't
You do
bet
not
against the
bet
market.
against the momentum of the marketplace. Okay,
Bet-
you have, believe me, I can recite those 55 bear arguments, Mark. I got them too, but you don't bet against the market. Momentum is a real thing. It is a real thing. And when people miss out on an opportunity, they have a tendency to chase that price action. The real traders get in with the timing, their timing accurate, and then they wait for technical setups to trade that momentum. Once these time frames are aligned, you got to trade momentum. You have to. In the last 4 days, it's been aligned. Now, again, the concerns I have, guys, they're not fundamental concerns right now. The concerns I have right now are 35.87 and how the market handles technically this all-time high.
Now, Matt, what would you like in an ideal setup? Like, let's say for a new trigger point, right? Let's say you didn't add as much bullish delta on the breakout of 3,400 as maybe you would have liked, right?
Okay.
What is your dream setup this week from a
Markets
technical
rotate.
perspective?
Markets rotate, right? And so simply because the momentum, let's say the market carries into that, S&P 3580 level, you see Apple goes from 137 to 130. You probably see a little slowing momentum in Apple. You probably see a little slowing momentum in Google. You probably see a little slowing momentum in Facebook. You probably see a little slowing momentum in some of those aggressive areas of the market that have triggered either last Thursday, Friday, or this Monday. Well, remember, as the market gets a little bit overextended, a lot of times you'll see a little bit of momentum shift, but where does that money go? It's not about if that money goes to cash. Money doesn't go to cash. It's where does that money go next, right? It only goes to cash when people get really concerned about the market. When the market's trading bullish and it's at a resistance level, yeah, you see profit taking in the stocks that have had appreciation, no doubt about that. But a lot of times it simply rotates. And so for me to answer that question, Mark, if you're looking at the Apples of the world and you're saying, man, I love that trigger, but it ran too aggressively. It's at close to 124. You're too tight against that 130 target. Maybe you're a little hesitant there, right? Or you're looking at, Amazon. You're like, man, I should have caught the breakout on Friday. You can't justify buying Amazon today, technically. Not this second in time. You can't justify buying Amazon at 34.54 when the all-time high is staring smack dab at you, 100 points away. So, you can't justify that from a reward to risk ratio perspective. So maybe you're like, man, I should have hit, Amazon on Friday's breakout, and it was a great trade on Friday. It was a great trade earlier today, but now it's just ran too far, a little too fast, and your reward to risk ratio is a little bit shot there. Let's say you're looking at BABA, and you're saying, man, I like that Apple, I like Google, I like Amazon, whatever it is. Well, BABA is on a one-day breakout right now. Today's that confirmation. There's nothing above the high. There's not that 100 point away resistance level. BABA's triggering today. You got a decision today. Do you pay 308 or do you wait for the snapback, retrace to 300, like Cody would love doing? That's a triggering event today on BABA. When you're looking at DH Horton in the housing sector, DH Horton has not triggered here today. This is, to me, DH Horton is one of the better triggers that is coming off some degree of consolidation in the short term. DH Horton is not triggered yet. So if you're in Apple, or you're looking at Apple, or you're looking at BABA, and you think Amazon's too overextended, and you're coming into the midweek and you've seen some of that price appreciation at the top of the market slow down a little bit, yeah, I'm looking at a DH Horton. I'm looking at a Toll Brothers in that capacity. Walmart, Apple, Amazon, all of them running aggressively this morning. Walmart running aggressively this morning, no doubt about that. But what's the difference? Walmart is confirming literally today on a trigger, versus Amazon, which confirmed on Friday, Apple, which confirmed on Friday. So you're going to see a little bit of rotation here later on this week. And so, yeah, you're enjoying the option report is killer this week. No doubt about that. It's had a great day here today. No doubt. Give Tyler Craig a lot of credit for that. But you're going to have great trades that are still, hovering right under those resistance zones later on this week too.
Yeah. Yeah. I think you can go down to stock picking, Mark, obviously, as Matt just broke down a lot of the technicals and whatnot. So even when the
Okay, it's
market's
simple to
running,
me.
yeah.
Work off the options report earlier in the week and look at the stock report midweek.
Yeah. Yeah.
It's
I
kind
agree.
of, honestly, that's how I see this entire week playing out. And I can't say that every week, but that's kind of how it works when the option report has a lot of those high flyers.
No, I mean, that makes perfect sense. It really does.
And Mark, one last note on your thought on earnings, how those are going to be some of the headlines. We don't know that yet, but what we do know is that there's already been 22 S&P 500 companies report for this quarter's earnings, not last quarter. 20 of them did come out and beat their estimates. So we know we've got depressed expectations. Could they come in and do that same thing and have a theme? Matt, you started the show with, probably up in the high 70% companies will probably beat.
I think it's going to be an impressive beat this season. I think the first, and again, we're just starting earnings season. We've only had a few companies so far report, but those companies that have reported, I don't want to say their numbers are impressive, but they're impressive for the time. And they're impressive in comparison to last quarter and the quarter before that. So, unlike 6 months ago where we were thinking earnings were going to come back by the third quarter, that hasn't been in the cards since last quarter, guys. Where last quarter came in, there was no way S&P 500 companies were going to be profitable this quarter. And so seeing the market, it's like building support. You're building a little bit of support. So going from 35% negative to 20% negative, even though it's still negative, you got to see it as a positive given the fact of where we were 3 months and 6 months ago. And again, we all know the economic projections from 6 months ago have been blown out of the water. They just don't exist. And quite frankly, they never really truly existed outside of, political realities of of our times. V-shaped recoveries don't exist in these capacities. These markets the economy is a slow moving beast. We're a $25 trillion economy, guys. It takes a while to get that sucker moving in the right direction. But once it does move in the right direction, you start to inch your way up, you start to build momentum, and then the market starts thinking about, okay, maybe not 2020, but we're moving in the right direction. We're going to continue moving in the right direction. So it allows investors to have a little bit more confidence moving forward. I do believe that we will be talking more about earnings, and I do believe the market is moving on to the backstop, and the belief, whether that's mistaken or not, the belief that we will have a large stimulus coming post-election, and the reasons behind that are simply what the polls say. Whether you believe the polls or not, it's what the polls say. It's what the market is moving on to in terms of a data-driven market. So to me, I think you got to be bullish here. And I think you got to be taking advantage of the price momentum.
A couple things I want to do next, Matt. I do want to flash through commodities and Bitcoin. Take a look at those as well as sectors at some point in the show. We can do them in either order. Yeah, you want to do commodities first or sectors?
I can take a quick peek.
Let's do
quick peek
sectors
at the sectors very quickly. First and foremost, just to show everybody kind of the newsletter, we rank all of the sectors, and we rank the sectors, guys, from a trend perspective, pattern perspective, from a fundamental perspective. We take different versions of analysis, and every coach kind of has their own unique perspective. But we gave the S&P a fairly significant upgrade this week. We were 40 before the breakout channel. We opened that up to a 30 ranking. That's in the slightly bullish category. If we high base and then we break out that all-time high, obviously we're going to move that up into the strong bullish capacity, but we still have some technical charts or technical resistance levels to navigate on that one. But technology, discretionary, base materials, staples, industrials, communications, utilities, healthcare, even energy. Yes, even energy got a little bit of a slight upgrade coming into the report coming into the week this week. Now let's take a look technically at some of these sectors. First and foremost, the basic materials sector, and a little bit is gold and silver starting to happen and starting to price action happen in those areas, but the chemical space has been fairly hot out there as well. Basic materials are a little bit overextended coming into the resistance channel at 67. I expect a little bit of consolidation here in materials, given the fact that you are overextended and the volume over the course of, since we've seen the breakout. Let me kind of give that volume indicator a little bit. You see the volume just down, down, down here. Well, that to me is that's fairly compelling evidence that we're not seeing the euphoria take hold that typically is needed to see a continuation of a breakout here. You just don't have the belief in the movement. You don't have the participation in the movement right now. You're overextended. Given that, I don't expect a lot of downward movements in price here, guys, but I do expect some degree of consolidation between that 66 and 67 area. Give that a little consolidation, 2, 3, 4 trading days. I think this is an area of the market we're looking at next week. I don't think this is an area of the market we're looking at this week specifically. Give us a little bit of consolidation, put it in the crock pot, let it cook a little bit, and then we're going to have a nice little breakout perhaps later on this week, Thursday, Friday. And I do think we'll have some very, very significant discussions in the scouting report meeting on Friday in this sector, but I think we're a little premature here. Communications has been performing very similar to the overall broad market here. Very similar type pattern in communications as you're seeing in the actual broad market. And with that, the upgrade in the broad market, you also saw the breakout in communications. Obviously, you got a lot of headlines over there, Google, Facebook, but it wasn't just Google and Facebook that is really looking at potential triggers. Obviously, Facebook has a beautiful trigger here earlier today, and seeing the continuation of that momentum build throughout the entire day. Google here also, that 200-day simple moving average bounce a couple weeks ago has proven very, very, very powerful. Kissed off it to almost the penny, and you've seen nothing but good price appreciation ever since that, with not a lot of selling activity. But you also had, Twitter with a wonderful breakout on Twitter after a little bit of a high base scenario. And so there's a lot of good triggers in the communication space. This is the first day of confirmation in communications, with the potential price movement all the way up into that 64 to 65 range. You should see some continuation of price appreciation here in the communication space. Let's take a look at energy. We did upgrade energy, but that's not because we believe in energy. Personally, I do not believe in anything Goldman Sachs or Deutsche Bank said about energy here today. Literally not a word Goldman Sachs said today regarding the dollar or the energy space should be listened to by anybody in any capacity. It was the biggest nonsense, and I'm not even going to repeat what the nonsense was. That's how big of nonsense it was. But the energy space is not something I would be focusing on here. I still have very, very big concerns about the energy space, and I don't think the energy space is even remotely seen near the bottom of what is going to happen in the energy space. Right now, we upgraded it because it did get above the 9 EMA. So the upgrade was more from a technical perspective, not from a fundamental perspective. Once it got above that 9 EMA, in between the 9 and the 20, you're definitely in the bear zone here. And I do think there's bearish trades to be had in the energy space specifically. But the upgrade was because the momentum of this trend, as you can see this trend, kiss off the 9 down, ride the 9 down, kiss off the 9, consolidate, went up a little bit. And so that pattern, the momentum pattern of trend analysis, was violated late last week. So the upgrade was to reflect the weakness in the trend overall, not necessarily the pattern. I still have a downward trajectory in energy space. Financial is going to be all the news this week. It's an area of the market where, because I'm not a big fan of trading around earnings. Tim, I know you love trading earnings type things. When I was a younger trader, I loved the analysis behind earnings plays, implied volatility crushing, cash flow strategies the day of earnings. I don't have the appetite for that type of short-term risk any longer, even though the probability is on your edge. Tim, you love it, but this is a space where you just have almost everything reporting this week outside of some insurance. You have banks reporting. You have your big money center banks reporting. You have your mortgage firms reporting. You have your investment firms reporting here this week. And so technically, I think you got to upgrade it given the fact that, we did break out of that 200-day. But overall, I got this market in some degree of neutrality. And I do think it's a stay away until post earnings numbers are had here. Maybe at that point, we see a little bit more of a continuation of some bullish uptrends. As of right now, I think this is a stay away in the financial sector. Industrial sector, nice little upgrade. Overextended a little bit, breaking out of that 80 barrier last Thursday with a nice little hammer candle. Should see some continuation. However, you do have a little bit of technical events right here at 81. Old resistance, it was the gap out channel here. You reclaim that 81, you see the continuation. You certainly have room up to 85, but kind of like the basic material argument, I'm looking at the same thing in industrials here, a little bit overextended, starting to run into a little bit of left-hand chop. I expect a little bit of consolidation. I think you might have some better trades in this space later on this week. Technology running today, obviously, we looked at the NASDAQ, the S&P, those big dogs, the blue chip, big dog tech plays out there, obviously strong early on this week. The question coming into tomorrow, Amazon Prime Day. The question coming in tomorrow, Apple iPhone Day. The question coming in to the technology space, can we see the momentum continue up into those resistance areas? I believe we will see the momentum continue until we see resistance, but with technology, resistance is going to come fairly tight here, guys. You're looking at 125 to 127, current price tag around 124. Not a lot of room in technology specifically until we start hitting into those all-time highs. It's going to be interesting to see how, and I think this is going to be a little bit of a leading indicator for the S&P too. How technology handles those all-time highs will be that give us a little bit of indication of this other market, i.e. the S&P 500 approaching those all-time highs, because I think tech will hit it first, and we'll see that this week in my opinion. Consumer staples, overextended coming into the breakout. To me, great movements over the last week. Missed out on it. I'm thinking this is to me a little bit of a stay away. I think you're overextended. I expect consolidation in this space, although I still like Walmart quite a bit. Real estate, nothing to see here in my opinion, just kind of net neutrality. Utilities is a space that is very interesting to me right now. It's one of the hotter areas in the market from both a technical and a price performance perspective. You're very, very overextended in the short term, although I wouldn't be chasing the dragon of momentum of utilities. That is absolutely insane that I even had to say that. Oh, yeah, don't chase the dragon of utility momentum here, but get some utility stocks on that watch list, guys. A lot of times when utilities does set up, it's typically because there's a little bit of concern out there in broader areas of the market. Having a couple stocks that you understand their technicals, you understand the stock, you understand how it performs. Having a couple utility stocks you can work off of if we do see patterns start to develop here, maybe a high base, maybe a retracement, could be fruitful in the future. But this to me, because of the overextended nature of it in the short term, is a stay away for me. Healthcare is also a little bit of a stay away from me at this point, but healthcare has been a stay away for me for 8 months now. So, that's nothing new for me. It's a stay away simply because you're overextended coming into the resistance channel at 109. So you're sent right at that 109 resistance channel. You're overextended. Can the momentum carry? Obviously the momentum can carry, but I'm not going to bet on it. So healthcare, a little bit of a stay away for me to initially start the week. You can say the same about discretionary, but the difference is it's breaking out. You can see some momentum carry through in discretionary, especially on the backs of retail. Retail this week, retail sales report coming out later this week. Best Buy, Amazon, and a lot of discretionary type stocks, starting their holiday push this week, which kind of saddens me on October 12th. Holiday sell push. That kind of saddens me.
Dude, I was seeing the Christmas tree up on QVC 2 weeks ago.
Well, I get it. That's QVC trying to market their Christmas sales. If my neighbors put their Christmas tree up in October, I'll go take it down for them. Come on. I mean, we've got to put the
look
taps on,
now.
tap the brakes on
How big a
Christmas.
boy are you there, G?
I'm a big boy. That's
I'm a big boy. I'm a big boy.
By the way, there are 9 sector upgrades on the newsletter this week, also a market upgrade. Make sure you go and review that first thing over the weekend, guys. Definitely valuable content for our pro members out there. Love the breakdown there, Matt, on those sector analysis here today. And just on that discretionary chart, just beautiful breakout there. It is one of our highest ranked at 25 yards, right there with Tech Bell.
Honestly, it was the weekly chart. The weekly chart is pure.
Yep. Let's talk oil and some of the other commodities here. Mark, I want to get your take on oil as we're coming back into the range here a little bit down today. A couple of supply side stories. Obviously, the hurricane is now moving inland, and it wasn't as big of a threat as it ended up materializing. And now here we are, more production in the Gulf of Mexico coming back online, supply side story. And then in Libya, you had conflict breaking out there recently, and obviously, a concern there from a political and geopolitical perspective. But then again, it did shut down some production. El Sharara, which is their biggest oil field in Libya, back online now, though, Mark, another 300,000 barrels per day. In my opinion, oil's just range bound back and forth. Got a couple of headlines to bring it down here today. Mark, what's your read?
Listen, if you are, oil is a fine market to trade if you're one of two things. If you're a day trader, or if you know how to trade consolidation neutral patterns. If you are a swing trader, it is a terrible market. It will continue to be a terrible market without a legitimate catalyst. I've been saying for a while now, 35, 45 range on oil. Might have another support test, but like if you don't have a tested, I have tested my consolidation rule-based pattern, you should just not even spend any time with oil.
Yeah. And, you've been calling the range between like a 35.6 to 45.6 kind of range, Mark, but we're even in the short term, though, we're developing between 36 and 41-ish here. Matt's stuck in the range here. Anything you want to add to that?
Nope.
Yep.
I currently treat analysis on oil like Mark treats analysis on the dollar.
Grab a cup of tea,
I went and refilled my teacup.
There you go.
No.
Well, let's get your take on gold here. A little
Tim,
dodgy today, not much
do
going
you
on.
guys ever do anything with consolidation patterns? I don't think it's either of your cup of tea, right?
It's not my personality. I will if I'm
No.
looking for theta, but I'm finding plenty of different ways to play theta, Mark. Cover calls, naked puts, other ways. So I'm not forcing that, here in 2020. I'm playing delta and theta through the more traditional stuff. Bull put, naked put, cover call stuff. Yeah.
Nothing wrong with it. We gravitate to what we gravitate towards, right?
Matt, gold hesitating again here. Another reminder that there's all kinds of different challenges it has to work its way through: moving averages, intraday resistance zones, daily resistance zones, all that kind of stuff, and the dollar under pressure. Anything you've seen in there in gold, Matt?
No, like I said last week, the increase in pivot here, followed by the break of that trend line there on Friday, certainly sped up the analysis, in my opinion. But I still believe we're a little bit premature in gold here, especially coupled the overextended nature of basic materials setting at resistance levels right now. I think you're probably going to have a little bit more opportunity quicker than I originally thought, especially given the fact that the market has bought up that support level. I still think we're a little premature here. Let's navigate the 50-day moving average and see how that behaves. For me, I got to see the breakout of 1950, and I got to see a little bit of a retracement after that. But first retracement after a breakout, I think, can be traded.
Dollar next, if we can. Obviously, that bullish retracement last week did fail. It broke down below that, pivot back now into a range here, Matt, UUP, and just kind of stuck below the moving averages now. Not a good looking chart. What are you seeing here technically?
I'm not seeing anything technically here. I don't think there's a trade to be had here. It kind of feels like we're going to be stuck in net neutrality on the dollar for the next little bit. So with and it wasn't just the failed retracement, it's now the failure of the entire the reversal trend to confirm. Remember, you have different levels of confirmation. You have candlestick confirmation on potential trading patterns. You have, pivot confirmation on trends developing. And the dollar had that opportunity to confirm at that 25.2 level. It didn't. And so at this point now you're in some degree of net neutrality, and it's going to take a while to see. Yeah, you're going to have moments in time, no doubt, because when we rank the dollar, we're not just ranking the dollar, we're ranking the dollar against other currencies out there. But for the most part, the dollar does have evidence of going net neutrality for quite a while. So to me, I think this goes into some degree of net neutrality. Whether you have a slightly bullish or slightly bearish stance is going to be based on where you're at technically in that net neutrality. But to me, dollar going neutral is probably a bullish thesis for gold.
Yeah. Yeah, I think that definitely is as well. I mean, in my estimation, it gives gold the chance to run on its own merits instead of just dollar counter reactions. Yeah.
And this isn't going to be reported very much in mainstream media because they're going to be focusing on headlines that get clicks, like Amazon Day and Apple Day, even though we've known full well about Amazon Day and Apple Day and everything that encompasses Apple Day and Amazon Day for a long time now. So there's nothing new there. So why are they running? Well, one of the reasons, and again, this isn't going to be reported in mainstream media, but the Chinese government removed some of the financial restrictions on shorting the Chinese yuan, and so basically what they're now allowing is to open up their financial restrictions, and that had a fairly significant movement in the overnight action in the futures market, given a lot of support to the Chinese economy and a lot of support to the Asian economies out there, and that momentum just kind of carried through the cash open here today. When the news headlines of Amazon and Apple and Facebook and Twitter and all that kind of took over. But China reducing their restrictions on shorting yuan would lead to a little bit of net neutrality in the dollar as well.
Mm-hmm. Well, I knew about Apple's iPhone Day, and I knew about Amazon Prime Day. I didn't know about the Deals Day out of Target and the Black Friday's Jump Start out of Best Buy.
And they're all doing it, buddy.
Every big box retailer is having a special day here soon.
Everybody's going to have their day. Everybody.
Yeah, that's interesting. All right, guys, let's take a look at Bitcoin, then transition into stock talk. Bitcoin here, obviously, we've been waiting for that technical breakout for some time. It did develop. It's now carrying through here, Matt. Obviously, Bitcoin trades over the weekend, 24 hours a day. And on a Monday here, looking beautiful, 11,645. Matt, give me a read on that chart because you've been nailing this one for a while, waiting for this breakout. So what are you seeing here?
You got to like the breakout here. A couple things. Number one, you're not overextended coming into the breakout, and like I talked about last week, the more this neutrality at 11,000 by 11,200, right where that 50-day moving average is, the more that went horizontal, the longer we saw increases in support, the more you got excited about this potential breakout. And it wasn't just me that was waiting on that potential breakout. There's a reason the market sells at 11,200 because other people are waiting for that breakout as well. Once you get it, it removes the gloves a little bit. You open up that risk graph, and then you start taking advantage of the price movement a little bit. You got to call this confirmation number one, day one of confirmation. I kind of feel like that 12,200 level, the old head and shoulders formation right there, 12,100, 12,200. I think that's an obvious target there, with target 2 in the 12,500. But I'm starting to feel like this has some momentum behind it, guys. And even though technically you got to target where you target traditionally, I still feel like this has some legs, and it might see a leg up on top of that.
Mm-hmm, mm-hmm. Well, there's some clear air even into those resistance zones, obviously, and then those weekly charts. If you can get past those levels,
there's nothing like the number one law enforcement individual in America coming out and doing a little dance on Bitcoin, right? Dancing on the grave of Bitcoin to unite all the Bitcoiners out there in the world.
Yeah, tell me what to do.
They don't understand this cryptocurrency and the psychology behind this cryptocurrency. Because even though I've been out for a long time in crypto, I do support some of the underlying thesis of why Bitcoin exists. In fact, I support quite a bit of it. And even though I've been out for 4 years now, almost since 2017, really, that got my juices pumping a little bit. It made me want to go fight for Bitcoin a little bit.
Mm-hmm. Well, and by the way, if you are a crypto trader, Bitcoin's kind of leading the way here. It's the best one. It's the only one we really analyze on a daily basis.
I care about.
But Ethereum is pushing a breakout too. It's looking pretty clean.
Yeah, you guys
Litecoin as
talk.
well.
You guys talk all your cute little crypto talk. You guys, we keep you guys in a unknown hidden circle for a reason.
Dude, I didn't bring up Potcoin. I mean, Ethereum, at least, I will, I'll defend Ethereum. It is my cute little
Listen, you can
crypto
bring up
talk.
all the other crypto crazy nonsense. The only one that matters is Bitcoin.
And it's running first. It is leading the charge here, no question about it. All right, let's talk companies here, guys. A couple of different company news items. Then actually Monday mornings here, we got a bunch of analyst upgrades as well. We'll take a look at them. I want to start. Let's start with Twilio, actually, Matt. A momentum play much of the year. Been a really strong performer, running here again today. They announced deal. Actually, they're buying a company called Segment for $3.2 billion, who deals with customer data as well. And usually when somebody acquires something, you're not going to see a pop in a stock, but investors love this news story. Momentum run here, Matt. Is there anything you could do with Twilio besides a bar by bar?
No. The only thing you could do in the short term is bar by bar and try to take the momentum, figure out a stop loss on the intraday chart. Obviously, that news got me interested in Twilio a little bit. And, if you're looking at this from an intraday perspective, obviously the trigger of 330 really makes some sense here. The problem is you got to get a fairly substantial liberal stop loss underneath 312, the gap out channel, if you want if you wanted to look at that from a technical perspective. So you could certainly momentum trade this. However, for me, Twilio got on my radar basically with the news, right? I'm not looking to chase the dragon. I think it's overextended. Certainly can stay overextended longer than I wanted to. But I think what Coach Frank would say here is you've missed it. You've missed it. Let it set up. Get it on a watch list. Focus on the analysis. But you've missed the initial one. Momentum trader for those guys who love momentum, no doubt. But for me, you wait. You put it on a watch list and you wait for that next setup.
Next one, General Motors, and let's take a look at GM. Obviously, been in the news a bunch here in the last couple of months. Another news item here today. They reported a 12% increase in their sales in China, Matt, from July through September. First quarterly increase for GM in China in a couple of years. We're pushing up towards resistance after running into it. Any interest in GM here potentially for breakout?
I do have a little bit of interest here in GM, and I like, the news was obviously positive today, but guys, when you've ran from 28.5 to 33.5 in GM, and you might think, well, that's only like what is that, like $4, right? It's like, oh, that's only $4. No, it's 12%, guys. You've ran 12% into resistance. You're overextended in that. What you want to see is what GM's doing in the last 2 days. If you're looking to trigger here, you want to see the consolidation underneath that the 33 handle. So you want to see that consolidation. And if you get another 2, 3, 4 days of consolidation, you're going to have a wonderful, wonderful breakout scenario, in my opinion. And then when you look at this on the weekly chart and you see what that 33 handle kind of represents, old support over here acting as new resistance over here, and there's not a lot of room, when you're looking at this visually on the breakout of 33 all the way up to 35.5. But again, that's another 8.5% up into that. That's a wonderful swing trade from a projection perspective. But I also think you got to look at it from a position standpoint. I like the defense it played at the 200-day moving average on the daily chart. Couple that with the 50-day moving average as well. I think you got to be, looking at a little bit of a breakout. And if it breaks out of 33, 35, 30.5 is an obvious target. But that would be a short-term higher high type target. You're looking at a new trend develop above that level. So I do think position traders and swing traders are looking at this potential 33 breakout on GM with some degree of anticipation.
Yeah, I would agree with that as well. And we've had quite a few interesting companies that caught my attention on upgrades here today, Matt. Let's run through them. We'll get both you guys' analysis on it. Let's start with Twitter, actually. Big name there. Somebody that a lot of people follow. Had a nice little run here on momentum. Deutsche Bank upgraded its recommendation to a buy with a $56 price target on Twitter, citing 22% upside. Maddie, start with you. Agree, disagree?
Start with Marcus, Deutsche Bank.
I understand. Marky, what you read here? Obviously, catch a little moment.
Reasonably,
your audio must have come down.
Because I was choking on a vitamin, and so I lifted my headset up. That's why. Listen, Twitter has outperformed the market. Had the same type of sell-off in August, rebounded quicker. There's relative strength in the market. You know, nice little breakout there. You know, I mean,
Mhm.
if the market continues higher, Twitter is going to do really, really well in the short term.
Strong momentum, little breakout on this news, whatnot. Let's go to
Hold on, I've
DraftKings.
had enough time to
All right,
explain my
I didn't know if
thoughts.
you were like going full
No, hold on. What was Deutsche Bank's price target?
56.
56. Deutsche Bank is the worst bank in American history. And you might say, why is it American? Why are you talking about American? Because American conglomerates own that terrible German bank. However, I will say this. I agree on the price upgrade. I do. Technically, you're seeing a breakout. You should see price appreciation on top of this. 56 is a little too aggressive, in my opinion. 56 represents a fairly substantial upward movement in price. I just don't see that in the short term. And again, this is just, we're debating semantics here, but I got a price target of 53 on Twitter. When you're looking at it from an average cycle perspective, higher highs, higher lows analysis, you have a potential average yield in the $8 range. So one price movement, i.e. this price movement, went 7, this one went 9, average those out to 8. You take it from the base of 45 plus 8 equals 53. So excuse me, I do think the upgrade is absolutely warranted by Deutsche Bank here, but I think the $56 price target is just slightly too aggressive for Twitter. So I would put the price target at 53. But I don't overall disagree with the upgrade. I think the breakout's clean.
Yeah, strong pay analysis there. A couple upgrades actually out of Snowflake. Let's bring up SNOW, recent IPO that caught a lot of news when it did come out. And it had the double banger here today, Mark. Goldman Sachs gave it an upgrade, and Oppenheimer basically initiating coverage as a buy. So these weren't upgrades from where they were. They're just starting coverage. Goldman with a buy, Oppenheimer with an outperform. Mark, I know that when this thing IPO'd, you had some interest just in the momentum behind it and all that kind of stuff. It's not on my radar yet. Doesn't have an earnings date yet, and I would wait for some data and all that kind of stuff, Mark. But do you have any
Yeah, I don't have a good feel for Snowflake. I mean, obviously big, huge, like headline type IPO this year. I don't have a good feel at all for this company, and obviously the chart's consolidating, so it's a stay away until I get because I have to have a fundamental feel to do anything, and I don't have a clue on Snowflake.
By the way, I don't know if these things are connected, but the upgrade out of Goldman came on the same day that Snowflake announced that Goldman has initiated a strategic partnership using their software at the firm. So I don't know, maybe.
I'm sure it's just a coincidence.
I'm sure it's a coincidence there. Matt, 2 upgrades or initiations to a buy, I should clarify. What's your read here? Matt, he's on mute.
Sorry, I'm back. I don't know enough about the company from a fundamental perspective and its impact on its industry and its competitive nature within similar companies well enough to have an informed opinion on whether or not a traditional upgrade or not is warranted. I can only attack this from a technical perspective, and technically consolidation over the last 4 weeks, 5 weeks, you're looking at a consolidation range between 220 and 260 on the top side from an intraday to 230 and 250. I could certainly see traders looking at that 250 mark, from an intraday perspective, and you can kind of see it here right there at about 250, 252, 252 and a half. I could certainly see those short-term traders being like, yeah, let's take advantage of that, ride that momentum into the 260 by 270 level. I could certainly see that. I'm looking at this level right here at about 270, 275 though. If you can break out of that, you're breaking out of all of this range and you should see momentum take hold. So, even though I can't agree or disagree from a fundamental perspective, because there's just not the data out there necessary yet, at least in my own research. This is not a company I follow very well, but in terms of the technical perspective, I can certainly see 250 carry some momentum into 260 by 275. Momentum above 275 takes over all the way to 300. So technically, you could see a map to seeing that happen.
Donkey Kong next. DraftKings, a very popular company. We've talked about it quite often here on the halftime report the last couple of months. Had a little bit of retracement developing, and Credit Suisse, Matt, came out and they started coverage on this with an outperform rating, creating a little bit of a bump up here today, still below the 9 and the 20. Matt, I'm going to start with you on this one. Then, Mark, do you agree with an upgrade today to outperform?
Yeah, I mean that's a fundamental thing, and they're looking at the business philosophy of the acquisitions and marketing that DraftKings has had. They're looking at this from a 3 to 5 year time frame, and from that perspective, I certainly respect an upgrade on DraftKings.
Yeah, Marky.
I mean, technically, would I upgrade price today? No, I think you got to recover the stock offering price from last week before you start looking at any new triggers on the buy side. But from a fundamental perspective, I think there's a lot of belief out there in specifically DraftKings and what DraftKings represents to the broader industry and nationalized gaming.
Mark, what about you? You agree, disagree?
Well, I'll continue selling my naked puts at $30, $35. I will trade Delta if we get a reversal pattern here. Let's say it consolidates this week, right? Those moving averages come down, and then we get a classic swing trading step system trading signal. I'll trade that to the upside as well.
And that starts at 55, right? You break out.
And the longer,
yeah. You break out of 55 here, you're reclaiming the 20, you're above the 9, and that's right above the stock offering, which means the gap's going to fill, and you could see momentum carry all the way up.
I will absolutely 100% swing trade that. If it like just skyrockets up there tomorrow, I'm not going to get a clean signal. I won't. But
listen, as of right now, this is no longer a retracement. As of right now, you've got to have some degree of neutrality on DraftKings. This is too deep of a retracement to actually consider this as a bullish retracement triggering into
Let it cook.
You have to, right now you're in the middle of what could become a reversal pattern. It could be a buying opportunity because you don't know yet. You can't do anything. But if you do break out of 55, which is the left shoulder over here, and you reclaim those moving averages, at that point, you're talking about a bullish breakout with price appreciation. So as of right now, the deep retracement knocks it off anybody's short-term watch list. However, DraftKings is one of those stocks that can set up fairly quickly. It's a stock, if it's on your watch list, you should be looking at on a daily basis. And if it's a stock you track, you are absolutely looking to buy above 55.
No, so yeah, I mean, it's just too universally loved by every analyst out there that if you get a technical signal, the sentiments behind it, that would be a nice trade. Wait for Matt's signal there, and you should be in if that occurs.
Two more from me here, guys. Ford Motor. I'm going to start with Mark on this one. We looked at GM earlier. Ford catching a breakout today. Upgraded by benchmark. Nice little candle there today, Marky. What's your read first?
And we go to the left of the chart just so I can see like resistance levels. I mean, it's pretty, right? Like, you got some momentum there. You're above moving averages. I mean, you do got a lot of noise, right? A lot of noise to the left of the chart. So
that noise stops if you get past 8.
Yeah, it does.
But there's something developing here for a nice cheap trade.
Oh, go ahead, Mark.
No, there's just something developing here.
Yeah, I think you're looking at GM and you're looking at Ford here, and you're saying, okay, if Ford can consolidate and break of 8, fantastic. A lot of that chop stops, in terms of the stopping of the analysis. GM, the same thing at that 33 level. So in looking at these two companies, you certainly don't pick them both, but they're both setting up very, very similar to one another. And especially with the industrial sector starting to set up a little overextended right now, GM's the one I'm looking at, but I wouldn't fault anybody for looking at Ford above 8.
Yeah, I mean, one thing I've learned in 2020, car companies can have PE ratios of 4 billion. So, to the upside.
That's what happens when you have 30% unemployment in a short term.
It's crazy to me. Last one here, Pepsi, Mark. Obviously a consumer staple company. They got an upgrade by Citigroup to a buy from neutral, popping a stock up here. Been a long consolidation here for quite some time, dividend payer. Matt, let's get your take first, then Marky. Matt, what's your read?
Yeah, I think this sector as a whole is a little bit overextended, and so I wouldn't be looking to pick up on Pepsi on a breakout, but I don't think anybody looks to pick up Pepsi on a breakout.
Yeah.
Yeah,
Mark?
I think Pepsi, until something develops, is a play off the consolidation floor.
Yeah, it's play
pattern.
off the lows and cash flow.
Play off the lows, buy cash flow, sell at the it's just, man, there's plenty of room that it could have had developed juice. And so
You don't make Pepsi exciting.
like,
No, you can do as many Pepsi challenges as you want to.
You don't make Pepsi exciting.
No, it's not.
That's not how it works.
No, I agree with that. By the way, there's several exciting companies on the weekend reports, like you talked about, guys out there. If you've not gone through them yet, make sure that you do that here today in preparation for your week. Those are all the notes I got here. Mark, anything else you want to make sure we hit?
oh man, I mean, nothing big, all right? It is gonna. I just know I'm gonna be so excited to talk about something besides stimulus. Like to think about something besides stimulus.
Well, we could try something.
Well,
right
I might have something for you. I have
Yeah,
a little poem.
well, we could do that in a second, or you could rant about Ben Bernanke and see if it gets us kicked off YouTube.
I don't want to get kicked off again. It made me feel bad last week. I was like, all I was saying was the former chairperson of the central bank was an idiot. That's all I was saying. I wasn't saying anything more than he's delusional and was the chief architect for corporate socialism. Prove me wrong.
I'm not going to keep talking here because
that's all I was saying.
If it happens twice in a row, I'd be like, okay.
I was just saying, Big Ben Bernanke is when the history books are written, Big Ben Bernanke will be on the side of the felt. They'll be on the side of those that went against America. That's all I'm saying.
Yeah.
Okay. But to help you out, Mark, to change the subject from stimulus and Ben Bernanke, I have a poem I want to read you guys. Okay. Now, Noah texted me last night. Now, to set this up, halftime crew, we were in the scouting report meeting on Friday, and we were talking about, the stock market versus the option market. And we were just talking about how, now that we have zero commissions in stocks should be a little bit more popular, and then, the heavy option traders came in like, oh, why are you talking positive about stock? Options are this. And it's like, we weren't saying options was bad. We're just saying stock is good. We weren't saying, and then that turned into, okay, Noah, I want you to write about why the stock market is better than the option market. And Tyler's an option king. And Tyler's like, well, I will write about why the options market is better. And so Noah texted me last night and he says, hey, or he texted me on Wednesday, on Saturday night. And this is like late night, 2 o'clock in the morning type time frame. And because Noah and myself are both night owls. And Noah texted me, he's like, hey, if you're up tonight, go read that stock report. So I went and read the stock report. And do you know how whenever you read something, you read it in the tone of what you think the person meant to say? You know what I mean? Like, you don't read it in your own tone? Do you ever?
Oh, yeah, it's important, right?
Right. So this is how I read the stock report, and then I'll show you the evidence of what Noah wanted. Okay. So this is how I read the stock report this Saturday night at 3 o'clock in the morning. Stock is less confusing. That's our claim. Stock is so simple, it should be a child's game. No delta, no rows, no complex risk graphs. The trading game is simple without option gaffes. Trade smart and trade simple. Keep it sane. Let those profits run with no time decay. Options expire like old milk in the fridge, followed by the urge to jump off a bridge. Stock is simple. It goes up and then it goes down. And there's no Vega risk to make you look like a clown. Trading stocks is a rush and pretty darn cool, with rates of return that will make you drool. Options are smart and leverage a tool, but all too often options play the fool. Get rich quick with returns that don't crawl, but they forget to tell you about the margin call. Greedy option traders buy and they sell with enough leverage to cause losses from hell. Sure, we'll admit that options are neat, but choose the wrong strike and market brings the heat. And rather than banking on a sweet credit spread, max loss shows up and gets in your head. Stocks are simple. What you see is what you get. Buy with confirmation and sell when the target's met. But if the markets are wrong and your stock goes south, you don't have to worry. Just let it stop out. Stocks are not rocket science, as you can see. Just calculate your risk and buy 1, 2, or 3.
So you
That's how I
basically
read it.
read this like the night before Christmas.
Yes,
like,
and I didn't even mean it. That's just how I read it.
That's how you read it. Okay.
That is
gotcha.
how I read it. And so I read it. I'm like, oh, Noah went with the Christmas theme. Oh my goodness. Noah is leading the retail. He is calling his shot. Noah is calling, he loves the Santa Claus rally. I don't care what he says. That is his number one philosophy in the market. He believes in Santa Claus coming to town. And so Noah, I read this on October 10th, Noah is front running Santa Claus rally. And so I read it in the Santa Claus theme. Now, I had not talked to Noah about which he mic dropped. He did. He mic dropped in the stock report. And I'll let Team Tackle judge for themselves who won the rap battle between Noah Davidson and Coach Tyler Craig. Noah obviously calling his shot, dropping the mic. Now, that's how I read the stock report. Okay. Now I'm just going to play just a portion of the video. Okay. Just a portion of what I read. And you tell me if me and Noah were on the same page here. Okay.
Stock is less confusing, and that is our claim. Stock is so simple, it should be a child's game. No deltas, no rows, no complex risk graphs. The trading game is simple without options gaps. Trade smart and trade simple. Keep it sane. Let those profits run with no time decay. Options expire like old milk in the fridge, followed by the urge to jump off a bridge. Stock is simple. It goes up and then it goes down, and there's no bigger risk to make you look like a clown. Trading stock is the rush and pretty darn cool with rates of return that'll make you drool.
Okay, so we obviously had different perspectives on this one.
So silly.
So Tim, I was sitting here at like 2 o'clock in the morning Saturday night, 3 o'clock, and I read it in the Christmas theme, and then I watched the video, and I'm like, okay, that was a little different take on it than I did.
I think I like the Christmas one.
I like them both.
They're both very good.
You know what, Noah, give Noah some credit for going into the rap. It's not. The rap game isn't easy, Noah.
The rap game is not easy.
The rap game is not easy.
If you've ever tried to karaoke Eminem, you know that's a tough do. So
yeah. So I give an A for effort. I loved it. I love it. It is absolutely fantastic. I still think it's best in the Christmas theme. I do. But definitely, guys, go out there, read the stock report, read the options report. Tyler just basically went, let me tell you why we like options. Cost basis, time decay, fortitude. Noah wins. But in my opinion, Noah wins. Noah was more creative. Noah has me talking about it. Noah has me thinking about the stock report. Noah's creative mentality, and this is why marketing works. I'm now thinking about that stock report far more than I've thought about the options report so far this week, even though I've actually really, really appreciated the options report triggering early this week.
Noah went for the creativity. Tyler went for the data and the facts. And as of
basically,
now,
they went for who they are.
That's right. By the way, they're going to debate that on the podcast.
Yeah.
So
we're going to judge them harshly in the podcast later on today. I'm looking forward to that. But I really thoroughly enjoyed both reading the options and the stock report. And I love Noah's creative mindset. I just absolutely love it. Tyler's analytical way about him, I love that as well. But I just honestly, I read both reports, and my first thought is just I'm just so thankful I have Tyler and Noah in my life to keep me entertained and help me navigate the markets on a weekly basis.
100%. Guys, we're going to start wrapping up our show here today on a Monday. Thanks for joining us. Thanks for being a part of Team Tackle. Come back each and every day that we do this, 12:30 p.m. Eastern. Whenever the markets are live, we go live as well. If you're brand new to our channel, click subscribe, click the bell. And if you're a veteran or if you just enjoy our content, click that thumbs up. Let's get the analytics out there. Matt, final thoughts?
Final thoughts. It's going to be a fascinating week, and I am, for one, very excited. We're going to be talking more about earnings and economic reports and actual things that actually have an impact instead of the hypothetical belief in what somebody will do for somebody else. So I like getting back to talking about a little bit of more market mechanics this week. So looking forward to navigating the market with the team this week. Obviously, technically, we got a really good start to the week, but this market can do absolutely anything. That goes without saying. let's see how the market navigates that resistance, those resistance channels, both in the market this week as well as in many of the sectors that are clinging on potential breakouts.
Yep. And we will analyze that day by
And I
day.
just had
guys.
one
Go
final
ahead, Mark.
Check the podcast later today too. We'll have it later tonight.
And we have the my favorite team as a kid was the Cincinnati Reds. It's the only real team that through adulthood I've kept a constant affection for. Joe Morgan, second baseman for the Cincinnati Reds, passed away today at age 77. Joe Morgan, 10-time All-Star, Hall of Fame member, one of the best
Great
second basemen. Joe Morgan, one of the best second basemen that the game's ever had. Part of that big red machine of the 70s. So Joe Morgan passed away, and I just want to give my condolences to his family.
Yeah, I loved him as a broadcaster too. I mean, he was so great at everything he did. Classy Joe, Mark. I did not see that note. That tears my heart.
Joe Morgan was awesome.
Yeah,
Joe Morgan was an awesome. He just a great guy.
When we were younger playing Babe Ruth baseball, Little League baseball, we were the Cincinnati Reds. We were big red, and this is back in the mid to late 80s, right mid to late 80s. And so, the 70s Reds were obviously amazing, no doubt about that. So that made me think of it as my childhood. Sad.
They had to break up the Reds, Matt. We won too many games in that little league.
It's amazing how it works. The older we get, the more we see this.
Yeah, it's true. All right, guys, that's it for today. We're done. We'll be back tomorrow, same time, same station. Get out there, do some good, and we'll see you guys in tomorrow's show.